This is Nightly Business Report with Bill Griffith and Sue Herrera.
Trade fight. The president is widely expected to make good on his promise of more tariffs on imports of Chinese goods, and investors are getting nervous.
Getting back to business, commerce in the Carolinas slows to a crawl as floodwaters rise and infrastructure is put to the test.
Media baron, the CEO of Salesforce, buys Time magazine, becoming the latest tech billionaire to expand his reach far beyond Silicon Valley. Those stories and much more tonight on Nightly Business Report for this Monday, September 17th.
And we do bid you a good evening, everybody. The $200 billion tariff threat on imports of Chinese goods may be close to becoming a reality. The White House is widely expected to make that announcement this evening, which would escalate tensions between the world's two largest economies. Ilan Mui is following the story for us tonight from Washington. Ilan, what do we know at this point?
Well, Bill, we're expecting that announcement to come at any moment, but one industry group, the Consumer Technology Association, has already put out a statement that appears to reveal some details of the plan, including 10% tariffs that would take effect on September 24th. Now, that does match some of the reporting that we've done earlier, and the group is saying that they are opposed to these tariffs. They would stifle innovation, and they're also questioning whether they're even legal.
Which companies are likely to be hurt the most? Do we have an eye? I mean, usually it's the Boeings and the Caterpillars, but what about now with the additional tariffs?
It's incredibly broad-based. The U.S. Trade Representative's office fielded some 6,000 comments from industry and from individuals on the impact of these tariffs. Companies like Dell, Intel, Apple warned about the potential impact on some of the products they use to make their goods. You're also hearing retailers like Office Depot and Sears saying that they might have to raise consumer prices. And then, of course, manufacturers like Cummins and Owens Corning, they're also saying that their supply chains will be disrupted. So the size of the tariffs means that this is very broad-based and almost every industry will be affected.
Ilan, China has vowed to retaliate, so where does this leave negotiations between the U.S. and China?
Well, Sue, earlier today, a White House economic advisor, Larry Kudlow, said that President Trump is not satisfied with the state of the talks with China so far. However, he said they remain at the negotiating table. They were waiting for China to come back and discuss these issues with them. However, one senior administration official saying that though the administration is unified, China has been obdurate. Back over to you guys.
Ilan Mui in Washington. Long night coming. Thanks.
Stocks fell into the close amid those increasing trade tensions. Steep losses in some of the biggest tech companies also dragged down the broader market. The Dow Jones Industrial Average fell 92 points to 26,062. The Nasdaq, though, was the hardest hit. It dropped 114 points, and the S&P 500 was down 16.
And technology stocks were among the biggest laggards during today's down day in the market. But you know, that sector has clearly been leading this bull market higher over the past decade or so. And small caps, which are up 10% this year alone, have also played a role as well. In fact, some say that group is even more attractive right now, given these rising trade tensions globally. Gary Bradshaw is with us tonight. He's portfolio manager at Hodges Capital. He's joining us from Dallas to talk about this. And I know you guys are very much value-oriented. Even with the gains we've seen over the last decade in the small caps, you still feel that they are of value, present value right now because of the trade tensions, right?
Well, you're right, Bill. The small caps are domestic, but more importantly, they put up fabulous earnings this last quarter. Earnings for the Russell 2000 of the stocks that have reported have been up 48% this year, or excuse me, this quarter that we're in right now. And we expect the third quarter for them to be up 36%.
Okay.
So earnings are driving the small caps. At the Hodges funds, we love the small caps. They traded about 22 times next year's earnings. Growing the way they're growing, we don't think that's too expensive. They're domestic, so tariffs don't affect them as much, and we think they'll continue to shine.
You gave us some names of some of the companies that you like, and you also make the point there are simply fewer companies that are publicly traded right now, and so it's kind of a supply-demand kind of thing. But one of the stocks you like is called Ollie's Bargain Outlet, which sounds like a lot of fun to me. Tell me why you like it.
It's a great retailer, Sue. And Ollie's, they are a deep discount, treasure hunt experience retailer, but they're only in 22 states, and they have 250 stores today. We think they could grow to 950 stores. No debt, same-store sales up 4.4%. And so a lot of growth in front of this company. They're coming to Texas next year. We love that. But there's just a wide variety for them to continue to grow. And the consumer loves them because they're hunting for bargains,
right.
They're treasure hunting, and we like Ollie's for the next 2 or 3 years. We think it could be a great stock.
You also like Diamondback Energy. Now, I'm curious, why do you like it better than you like some of the energy giants in this country, or what's going on with this one? Is it just a cheap stock?
Well, Bill, we like the small cap energy plays. We recently had our RSP Permian and the Hodges small cap get bought out by Concho Resources. Diamondback just bought out a smaller company, and they're going to grow cash flow, earnings, production greater than 50% in the Permian Basin. They're a premier oil company, and we just think they're going to continue to put up positive numbers going forward,
Okay.
Even with the acquisition they
I
made.
want to sneak in your last pick. Is it pronounced Cons, C-O-N-N-S?
Cons is based down in the Houston area. There's 114. They're a retailer that is primary in appliances and consumer electronics. There's 115 of them. They're growing them. They just beat their quarter for the 9th quarter in a row. And we think the stock's cheap, Sue. They should earn $250 this year, $350 next, and on a $35 stock. We think we could look out, it could be a $50 stock over the next 18, 24 months.
Very good. Gary, good to see you again. Gary Bradshaw with Hodges Capital joining us on the small caps tonight.
Well, the intensity of Florence may be gone, but the Carolinas face a new threat. It is flooding. Rising water damaged infrastructure, closed roads, and it left the city of Wilmington completely inaccessible for a period of time and shut off power to residents and businesses, something Duke Energy is working to restore.
About a third of our customers here in the Carolinas lost power. We serve about 4 million homes and businesses, and with 1.4 million customers having been impacted, we're pleased with the restoration progress that we've been able to make so far, especially under such challenging conditions.
And amid those challenging conditions, efforts are underway, as you might imagine, to get business back up and running in that region. Contessa Brewer is near Dillon, South Carolina for us tonight.
Convoys of power trucks exit off I-95. The interstate closures send tractor trailers through tiny historic towns, lines lumbering down main streets. Marion Clark is leading a team to respond to a train derailment in North Carolina, but navigation is a challenge.
So much road closure, you got to wiggle and zig and zag to get around.
Where you heading? More than 100 major roads in North Carolina are closed.
Go down and make a U-turn.
A real problem trying to move disaster recovery resources into the worst hit areas.
Well, the challenge is monitoring the roadways. As we see this water coming down from North Carolina, water levels are rising in certain areas and going down in others. Even though people think there's only 2 inches of water on the roadway, it's hard to tell if the underbed was washed away or a part of the roadway was washed away.
The economic powerhouse of South Carolina, the Port of Charleston, is moving cargo once again, as is the port farther north in Georgetown. After sending 6,000 employees home last Tuesday, Boeing restarted operations with a third shift last night. Norfolk Southern still has some rail lines out in eastern North Carolina due to washouts and downed trees. And CSX had that train derail, and it's rerouting others around flooded areas. Amtrak uses those lines too and shut down passenger service entirely south of Washington, D.C. Airports up and down the Carolina coastline are putting passengers back onto planes, with the exception of Wilmington and Jacksonville, North Carolina, plagued by cancellations. And the threat to commerce and commodities isn't over.
The farmers will be in a lot of trouble.
More than 12,000 farms in South Carolina are assessing wind damage, and watching for flooding that could crush the harvest of soybeans and cotton.
The crops can't hold this amount of water for a long period of time.
Is there anything you can do to prevent it at this point?
Pray.
The rivers are running at flood stage. Many of them won't crest until later this week. So the danger is not over, and the difficulty persists, moving people and supplies into the disaster zones. Near Dillon, South Carolina, Contessa Brewer, Nightly Business Report.
From flooding to business disruptions, the economic impact of Hurricane Florence is now starting to be tallied. Steve Leisman has more.
As the floodwaters from Hurricane Florence continue to rise, so do the costs in lives lost, homes and communities crushed, and in tens of billions of dollars of damaged property and economic losses. Rivers are not forecast to crest until tomorrow, so the water, already at historic levels, will continue to rise and lift the cost of the storm.
1 inch of flood water in a home can cause $25,000 worth of damage. So what we're seeing here is going to certainly be an extreme event, and policyholders are going to have a lot of damage when they get back to their homes.
While Charlotte is the biggest city to be hit, it's just the 17th largest by population, compared to Harvey that hit Houston, the 4th largest city. But the weather effects from Florence were so widespread that J.P. Morgan suggests the right way to think about it is in terms of the GDP of both states of North and South Carolina. And that's bigger than Houston, though smaller than New York, which was hit by Sandy. Typical effects of big storms are to cause deep pain in the local and regional economies, but rarely have much lasting impact on the broader U.S. economy. Some of the losses are made up over time through building and recoup spending, but not all. For example, hundreds of thousands of cars were ruined by the floodwaters of Hurricane Harvey. That prompted a massive rebound in car sales in the wake of the storm, but they trailed off over time to a more normal level. Other data, including the jobs report and hours worked, can also be distorted, making it difficult for policymakers to suss out the effects of the storm. On net, these storms are negative for GDP, but there are offsets, and the broader economy tends to absorb the shocks, especially now with growth surging. But that's cold comfort to those whose lives were inundated by the surging waters. For Nightly Business Report, I'm Steve Leisman.
And a bit later in our broadcast, a closer look at flood insurance and how to spot gaps in your coverage.
In the meantime, it's time to take a look at some of today's upgrades and downgrades. We begin tonight with American Express, which was upgraded to overweight from equal weight at Stevens. The analyst says that the company is successfully monetizing its card network. Price target now $131. That stock fell a fraction today to $109.20. MasterCard's rating was raised to conviction by at Goldman Sachs. The analyst there cited the company's potential to gain market share in Europe and also opportunities in the business-to-business segment. Price target $260. That stock fell a fraction to $216.47.
Lululemon's rating was raised to outperform from market perform at Wells Fargo. The analyst says the company's positive momentum should continue through the second half of this year and well into next year. The price target is $200. The stock rose 1% to $155.38. Twitter's price target was lowered to 21 from 23 at MoffettNathanson. The analyst there expects costs to rise into next year. The firm, though, maintains its sell rating. The stock fell 4% to $28.86.
Still ahead, what FedEx's results released tonight say about the health of the global economy.
The head of the International Monetary Fund says the outlook for the global economy has deteriorated. Christine Lagarde cites trade tensions and points to signs that growth has peaked in some advanced economies. She described the IMF's outlook this way.
Clouds on the horizon have not become lighter, but darker.
Many now expect the IMF to revise its forecast lower for global growth next month.
And certainly one company considered a bellwether for global growth is FedEx. Obviously, the more packages that are shipped, in theory, the better the economy. Well, tonight, the company reported mixed quarterly results. FedEx earned $3.46 a share. That was 35 cents below expectations, though. Revenue was up 11% from a year ago to about $17 billion. But investors were concerned about expenses. and that sent the stock initially lower in after-hours trading tonight. Lesley Picker has more on FedEx's results.
FedEx is seen as a bellwether for the economy as well as the forthcoming earnings season. Because of this, traders and investors place bets for and against the stock ahead of their quarterly report. While the stock sold off in after-hours trading, analysts say that the company's forecast is what investors should be paying attention to. FedEx raised its guidance by 20 cents to $17.20 to $17.80, and much of that range surpassed analysts' expectations of $17.32. Some investors sold on the news that earnings missed estimates, but the executives at FedEx expressed continued confidence in the growth of the economy and their ability to execute. The company also said that the tax reform has benefited their ability to pay their workers more. For Nightly Business Report, I'm Lesley Picker.
So let's turn now to Donald Brownton for more on FedEx's results and what the numbers may be telling us about the health of the global economy. He is managing partner at the independent research firm Brownton Capital. Welcome. Nice to have you with us tonight, Don. So,
pleasure to be here.
Even though Wall Street may be a little disappointed with some of the components of the earnings report, you make the point that this is the quintessential American company in the right place at the right time, correct?
Absolutely, absolutely. You know, time you order something from Amazon or any other e-tailer, odds are that FedEx is going to be one of those that deliver it. And what's interesting in this quarter is that not only was the volume of express U.S. and globally up 5%, but the average weight per package was up 6%, which means people are paying to express ship even heavier items. That's a bullish sign for the economy.
But their expenses have been going up, and for both FedEx and UPS, especially as we get closer to the holiday shopping season, both of them have struggled to keep up with these incredible number of packages that are sent during the holidays, and they try and beef up every year even more. Isn't that a headwind for them?
Well, it's a headwind, but I don't think it's quite fair to characterize it as both have struggled. Consistently over the last 5 or 6 years, FedEx has made service standards and UPS has failed to make service standards. FedEx has made a very, very aggressive multi-billion-dollar, multi-year investment in technology, in expanded sortation, automated sortation, more efficient aircraft, more fuel-efficient equipment, you name it, across the board. And that's paid off in that they've been able to meet the surge of volume, and they've been able to book better margins.
We've talked a lot in the program tonight about trade tensions, and the chairman of FedEx and CEO Fred Smith is warning against protectionist trade policies. How vulnerable are they to a potential trade war or the tariffs that are being levied?
Well, there's nothing in the current volume that suggests that all the saber rattling about tariffs has produced any real change, any material change in trade flows. However, though, the CEO and founder of FedEx is exactly right that a trade war would be detrimental to everyone's economy and detrimental to everyone's prosperity. And so I think he's both correct and it's just the right thing to do, to be very vocal about why it would hurt everyone, FedEx and just globally the economy.
On that note, we'll leave it there. Don Brownton with Brownton Capital.
Thank you.
Sales disappoint at Oracle, and that's where we begin tonight's market focus. After the bell tonight, the enterprise software giant topped profit estimates, but said that weaker growth in its cloud services division caused revenue to miss the mark. Company also announced a $12 billion stock buyback as well. Shares initially fell in after-hours trading. It finished the regular session down a tick at $49.18. The Department of Justice has given the green light to Cigna's $52 billion acquisition of Express Scripts. Company said that they now expect that deal to close by the end of this year. Cigna shares rose by 1% to $197.84. Shares of Express Scripts were higher by nearly 4% to $95.23. Teva Pharmaceuticals said that its treatment intended to prevent migraines has now won approval from the FDA. The therapy is viewed as a crucial source of revenue in the generic drug maker's turnaround. Teva shares were up more than 2.5% today to $23.43.
The cloud software company Nutanix saw its shares come under some pressure after The Information reported that Google may be launching a rival service that combines server, storage, and networking capabilities in a private data center. Shares of Nutanix plunged 11% to 46.43. Alphabet shares were off 1.5% to 1,159.83. And security software company Symantec said it has reached a deal with activist investor and hedge fund Starboard Value to add new members to its board. Symantec appointed 3 directors and will work with Symantec on selecting an additional member after the company's annual meeting. Symantec shares fell 1% to 1980.
Hurricane Florence could result, of course, in billions of dollars in insured losses, according to the Consumer Federation of America. Most of those losses will be filed under the National Flood Insurance Program, but many residents in affected areas are not adequately insured, and that, as usual, has homeowners across the country wondering if they have enough coverage. Sharon Epperson is with us tonight to talk more about flood insurance. This reminds me of earthquake insurance out in California. Even if you can get it, it's expensive, isn't it?
Very expensive. And, you know, a lot of people are not adequately insured. The Consumer Federation of America says it believes that 1 in 4 families in North Carolina who have flood damage and 2 out of 5 of those who are in South Carolina with flood damage do not have adequate flood insurance to cover any of their losses, which could be rather extraordinary. They're looking at potentially 100,000 claims for flood insurance, talking about $7 billion, the cost of that. And then when you look at insurance claims for wind damage, there could be over 70,000 of those claims at a cost of $3 billion or more.
Now, flood insurance is different from homeowners insurance. A lot of people also mistakenly think they're covered for a flood under homeowners insurance, and that's not the case.
That's not the case. That's a big mistake. So what people need to know is even if you have a homeowner's policy because you have a mortgage, you got the homeowner's policy, you are not covered for flood damage. You may be covered for wind damage, but you also may have a deductible that's higher than you expect for that, but it will cover something like a tree falling on your house because of that damage. With flood insurance, though, that is something that is a federal program, and that is something that you get through the National Flood Insurance Program. And when you're looking at that, you want to get it from an insurance agent. That's who sells it. The average annual premium is about $600 to $700, and you have to get it every year. You have to renew for that every year. But people just don't realize, and they also think that they have to be in a high-risk zone to get that flood insurance or to need that flood insurance.
Quickly, what if you don't have it? Do you just rely on FEMA or what?
So here's what's very important to know. 1 inch of flood water can result in $25,000 in damage or more.
Oh my goodness.
And some people who do not live in a high-risk area, I'm not saying the woman sitting across from you is one of them, but she is, can have flood damage. You don't have to live in a high-risk area. So it's very important to find out what your potential risk could be. If you're in a low or moderate flood risk area, it's important to get flood insurance or to at least look into it and to contact an insurance agent to find out more about it.
Wise words as always. Thank you, Sharon. Sharon Epperson joining us tonight.
Coming up, Time magazine finds itself at the center of the new philanthropy. Time magazine enters a new era. The storied publication was sold, and the new owner is well known to investors and a heavyweight in Silicon Valley. Robert Frank has the details.
It is the new philanthropy. Tech billionaires buying up storied print media names, not just for profits, but for influence and preserving big names in journalism. Salesforce CEO Marc Benioff announcing that he and his wife Lynn are buying Time magazine for $190 million. This is a personal purchase. It will not be part of Salesforce, and they promise not to be involved in editorial decisions. Benioff, worth around $6 billion, tweeted yesterday, quote, "The power of Time has always been in its unique storytelling of the people and issues that affect us all. We all have deep respect for the organization and are honored to be stewards of this iconic brand." It was a big price at a time when print publications are fading fast. The seller was Meredith Corporation, which last year took over Time Inc. for $2.8 billion and has since put up Time Magazine, Fortune Magazine, Money, and Sports Illustrated up for sale, saying deals for those other titles are expected, quote, in the near future. But the new breed of press barons is less like Citizen Kane and more like Bill Gates, driven by charity rather than just profits. Laurene Powell Jobs, wife of the late Steve Jobs, took over The Atlantic magazine last year and added reporters and bureaus as part of what it calls a radical expansion. The Washington Post has been thriving after Amazon CEO Jeff Bezos bought it in 2013 for $250 million, and billionaire entrepreneur Dr. Patrick Soon-Shiong bought the LA Times this year. As Bezos said when he took over the Post, quote, "We're not just trying to make money, we think this is important." And they want a bigger voice, of course. Benioff has generally shied away from supporting or criticizing the president, but he does support liberal social policies when it comes to gay rights and gender equality. But this could make him more of a target for the president. President Trump has often criticized Time for negative coverage and its covers, but praised the magazine in 2016 when they named him Person of the Year. For Nightly Business Report, I'm Robert Frank.
Before we go, a quick update on our top story tonight. The White House has released details of those new tariffs on Chinese imports worth approximately $200 billion. The tariffs will go into effect September 24th. The rate will start at 10% and go up to 25% by the end of the year. About 300 product categories were removed from the original list. The administration says it remains open to negotiations with China. We'll see if they answer
ongoing story.
See if they answer these now.
Right. That does it for Nightly Business Report tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a wonderful evening, everybody. We'll see you tomorrow.